It's Top That Trade with Bill Flynn, a Fox Business Network contributor, and Alan Knuckman, the chief market strategist at bullseyeoption.com. Here we go, guys. Round number one. No win, known knowns. Earnings season kicked off, and a study shows that even if you knew the numbers, it doesn't guarantee you're going to make money trading those companies in the market. Explain how you play earnings season for a profit.
Well, the number one thing that I like about earnings, obviously they come every quarter, you can't avoid them, is they often calm the markets because you get some volatility when people are trying to figure out what's going to happen. And they can also be a catalyst for a lot of stocks, but sometimes it just leads to profit taking. So you just don't know how the markets react, even if you knew the number. A good example, JP Morgan made $11 billion in pure profit, but their stock was down 2%. People were disappointed. So you just never know. It's just reality. But I do think it helps the markets a lot of times.
The shadow knows the earnings, whoever he is. But, sometimes what you'll see on earnings is that you'll have the numbers that everybody's talking about in the press, and you have the whisper number, right? Where people will sometimes, try to get in front of the number because it's supposed to be a great earnings number. So a lot of times all the good news is already priced in. So you get an earnings number that's supposed to be really good, and all of a sudden, boom, the stock goes down and you can't figure out why. It's because the guys who bought it before earnings are taking profits.
Round number two, collar required. A collar is an options trading strategy that traders use to limit losses. A huge collar trade has been put on by a trader in the S&P 500. So explain, is that good or bad?
Well, the good part about it is if you put it on right, there's limited risk. But what you're betting usually on a collar trade is that the market's going to stay in a certain range. And if you're writing the collar, you can collect money if it stays in that range. If you're taking the other side of it, what you're betting on is that the market's going to make a huge move. It doesn't matter whether it's up or down, but as long as it makes a huge move, you can participate in that move. Now, I actually think a collar trade is good for a lot of average investors who are, above the beginner level and actually start to trade because it's a way where you can get the odds moving in your favor a little bit, but still have limited risk.
It's free insurance. There's no such thing as free, but this is free. What you do is you sell some calls above to pay for your puts. Now, the downside is if the market just takes off, you limit your upside potential. But that's your only problem. You'll sleep well if you put on a collar and, you have that downside protection and it pays for itself. But you have to understand your personality. You can be more upset that you missed out on more upside or you slept well.
Sleep versus money. Interesting thought there. Round number three, dividend payout pick. What stock dividend do you like to beat inflation woes? Maybe it's a consumer stock.
Well, I think there's always opportunity. And when you're talking about dividends, I'm an options trader. So you don't get dividends when you buy options instead of the stock. So it's not something I know about, but I do know that the S&P yield has declined where it used to be about 3%. Now it's down to 1.5%. So the yield on just the S&P stocks has declined, but that doesn't take into account the potential appreciation. And obviously the S&P is up more than 15% this year. So that's really added to that little dividend.
I think right now dividend stocks are very popular with a lot of people that are getting close to retirement, mainly because you're getting a better return on the dividend yield many times than you are, in the bank account or on treasury bonds. Right. And there are some very good values that are there. Now, obviously, the higher dividend yield you're getting, the more risk you're normally taking with the stock. So you have to keep in mind that just because it pays a good dividend doesn't mean, it's a good investment. So you got to balance that. But I think right now there are some very good dividend paying stocks. Look in the insurance space. I think that's a great place. There's a lot of companies that are paying a good dividend right now. And I think it's a great way because I think a lot of those stocks look good as well.
On to your bonus round question for today. It's rough out there for fast food chains with a labor shortage. True or false? One chain is asking corporate employees to get behind the counter and fry that food.
Absolutely, yes. It's a chicken company, and I'm very familiar with this fact. But I want to point out to people, everybody thought that the problem with the labor market was because of the stimulus and people were just sitting at home. Not the case. People have choices now, and they're making choices on their own.
I would say true, obviously, because it's a chicken question, and you don't go against Alan because he knows chicken. The man's a chicken. He could be part chicken. I don't know, but I will tell you this: when you look at the overall labor shortages, we are definitely seeing this transform the economy. But the problem is, it may sound good, to see a transformation in the economy, but everybody's paying for it in terms of higher inflation.
We should have known. Alan is always up to date on all of his chicken news. The answer indeed is the national fast food chain Raising Cane's Chicken Fingers. You both win 2 winner chicken dinners on the house. Business First AM continues right after this. Go to businessfirstam.com for where to see our show on TV.